It's been a milestone week for precious metals. Gold and silver both broke into record territory, with gold touching new highs above $4,000 an ounce and silver soaring past $50. But while the excitement is real, not everyone's convinced this rally can keep going without a breather. Some analysts are urging investors to stay grounded and cautious at these levels. Gold, for example, struggled to hold its position above the $4,000 mark. Still, it's on pace to log its 8th straight week of gains, currently trading around $3,980 an ounce, up more than 2% from last Friday. Over the past 2 months, gold has surged an incredible 51% year-to-date, a historic run by any standard. Silver's momentum has been just as impressive. It's also in its 8th week of consecutive gains, with prices recently topping their 2011 record highs. Spot silver last traded just shy of $50, up 4% on the week, and a stunning 71% higher so far this year. Analysts point out that silver continues to outperform gold, fueled by strong industrial demand and renewed investor enthusiasm. At the same time, reports of a possible peace deal between Israel and Hamas have slightly dampened gold's near-term appeal as a safe haven asset. Despite the strong optimism, many experts warn that these major psychological levels, $4,000 for gold and $50 for silver, could signal technical exhaustion points in an overheated market.
Lukman Otunaga, senior market analyst at FXTM, notes that while easing geopolitical tensions could give bears an opening, the bigger picture for gold remains supportive. He says if gold breaks below $3,950, we could see a short-term correction, but a move back above $4,000 might set the stage for new highs near $4,050. Meanwhile, Michelle Schneider, chief market strategist at MarketGauge, told Kitco News she's taken profits on her gold and silver positions, citing too much fear of missing out sentiment in the market. Her take? After such a strong run, it's perfectly reasonable to step back and wait for the next buying opportunity. Schneider also cautioned that gold might be showing signs of a 2011-style top as investment demand has spiked dramatically in recent months. Data from the World Gold Council shows ETF holdings surged by over 221 tons in the third quarter, worth nearly $26 billion, putting total holdings just 2% below the record levels of 2020. As she put it, we need a correction and consolidation before the next breakout. Patience here can pay off. Others see volatility as opportunity. Christopher Vecchio, head of future strategies and Forex at tastylive.com, expects short-term turbulence but remains bullish in the bigger picture. He believes gold and silver are still in the early stages of a longer bull cycle, driven by persistent global debt and waning confidence in the U.S. dollar.
Paul Williams, managing director at Solomon Global, shares a similar sentiment. He acknowledges gold's elevated price levels, but warns against underestimating the market's momentum. According to him, $4,000 is a psychological milestone. It's natural for the market to pause and consolidate, but every pullback this year has been met with strong buying. He adds that the fundamental drivers, from fiscal strain to mounting debt and declining faith in fiat currencies, remain firmly in place. More investors, both institutional and retail, are seeking stability in tangible assets like gold. As Williams puts it, there's a growing realization that not everything is right with the modern financial system, and gold offers a sense of control and security. Looking ahead, the focus turns to Washington. With the U.S. government still in a shutdown and no funding deal in sight, upcoming economic data releases may be limited. Still, markets will be watching closely for updates from the New York and Philadelphia Federal Reserve Banks, as well as any headlines from next week's IMF and World Bank meetings. Key events to watch include Tuesday, Fed Chair Jerome Powell's remarks at the National Association for Business Economics meeting. Wednesday, the Empire State Manufacturing Survey. And Thursday, the Philadelphia Fed Business Outlook Survey. Whether this is a temporary pause or the start of another leg higher, gold and silver remain at the center of global attention, reflecting both economic uncertainty and growing demand for real assets. Stay tuned. We'll continue tracking every move right here. Subscribe for more insights from Bullion Pulse.